Investing can be a powerful tool to build wealth, but not every market is worth your time or money. In this video, we'll cover the top 5 financial markets that you should avoid to help you protect your hard-earned cash. Let's dive in. Number 5 on our list is high-risk penny stocks. Penny stocks might look attractive with their low prices and high potential for returns, but they're also highly volatile and frequently manipulated. These stocks often represent companies with unstable finances and limited information, making it difficult for investors to make informed decisions. Unless you're deeply familiar with this space, it's better to steer clear. At number 4, we have cryptocurrencies with low liquidity. While well-known cryptocurrencies like Bitcoin and Ethereum offer some stability, smaller altcoins often lack the liquidity that helps stabilize prices. Low liquidity can make it challenging to buy or sell without incurring a loss, and prices can swing wildly. If you're considering crypto, focus on more established assets and avoid lesser-known coins with little trading volume. Coming in at number 3 are binary options. Unlike regular stocks or forex, binary options work like a simple bet. You either win a fixed payout or lose your entire investment. This all-or-nothing approach creates extreme risk, with limited upside and significant loss potential. Because the odds are stacked heavily against retail traders, binary options are generally best avoided. Number 2 is forex trading with high leverage. While forex itself is a legitimate and profitable market, the high leverage offered by some brokers can be a double-edged sword. High leverage multiplies both gains and losses, so even a small market movement can have a big impact. If you're new to trading, avoid forex with high leverage and stick to more controlled, low-leverage options. And finally, the number 1 financial market to avoid is unregulated offshore markets. Unregulated markets might seem appealing with promises of high returns or low fees, but they come with major risks. Without regulatory oversight, you have no legal protections if something goes wrong, and these markets are often ripe for scams and fraud. Stick to well-regulated markets where your investments are protected by laws and standards. So, those are the 5 financial markets to avoid. Each comes with unique risks that can quickly derail your investment plans. Remember, the key to successful investing is balancing risk with reward, so avoid chasing high returns in markets where your risk exposure is sky-high. Thanks for tuning in, and if you found this helpful, please like, subscribe, and let us know your thoughts in the comments.